The only way to get money into your 401k is to contribute through payroll, but that doesn't necessarily mean you can't sneak money in from other assets. I'll explain how to do that more coming up. My name's Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Your 401k is likely your greatest wealth building tool. And what I mean by that is, and when you're saving up, when you're trying to build assets and grow assets, the 401k is the biggest tax shelter that's typically available to you. It has the highest contribution limits right now. In tax year 2025, you can contribute $23,500 up to 100% of your income, but then up to that limit, not more than that limit. Unless you're age 50 or older, you can do a catch-up contribution of another $7,500. And then special new this year, the super catch-up. If you're age 60 to 63, don't know how they came up with those ages, you can actually do an extra $11,250 instead of $7,500. So it's a lot. It's a lot that you can contribute into every single year, and then that compound interest growing over time throughout your career. Yes, the 401k, for most people, it's your largest wealth building tool. Well, how do you get money into your 401k? The only way is through payroll contributions, so withdrawals right out of your paycheck that go directly into your 401k. So I'm contributing 10% or I'm contributing 15%, that sort of thing. And then of course match as well can go in there. And then you can also roll into your 401k other tax sheltered accounts. So your old 401k or an IRA, typically you want to work with your CFP and explore all your options. Typically within a 401k, you have limited choices. You might have more flexibility with access to those dollars in an IRA and investment choices in an IRA. So work with your certified financial planner on that. But for the most part, new dollars going into retirement and retirement savings, the primary way that you can get money into your 401k is through payroll contributions. So the question is, I got this one recently from a fan of the show, and we do some creative planning with this sort of scenario all the time. What if I have a large chunk of dollars that are not set aside for retirement? They're growing taxable. They're impacting my tax return because there's capital gains getting passed through to me. There's qualified dividends or dividends that are landing on my tax return, interest landing on my tax return. These really are retirement dollars, but they're not sheltered from tax. I want to get the tax benefits of the 401k. I want to shelter them into my 401k, into the Roth side of my 401k, or even the pre-tax, so I can get a deduction on these dollars. How do I get these dollars over here that are set aside for retirement, but not in my 401k? How do I get them into my 401k? Is that even possible? It is, and it requires a couple of steps. It's sort of a two-step. We say, sort of like the shell game. If you remember way back when, where's, if you've got different shells, okay, where's the hidden thing? It's transitioning dollars from one area to another. So in these sorts of scenarios, and I'm going to lay out the few common situations where this might come up, you're essentially increasing your contributions far more than what your normal cash flow could afford. And then you're supplementing, that's going to bring down your take-home pay, but then you're supplementing that income by setting up an automatic, and that's key, withdrawal from that other account. Here's an example. Say that everything that you can afford, you're contributing 12 grand a year into your 401k, and that's the right percentage for you, and it works with your cash flow so that you've got enough take home to live your life and manage the rest of your finances. But you've got these other dollars over here that aren't in a tax shelter. Well, doing just simple math, you could increase your 401k contribution to hit the match. That's going to be approximately $1,000 per month extra going into your 401k and not, becoming take-home pay. So your take-home is going to be reduced by $1,000. Simultaneously, at the same time, you set up an automatic withdrawal from that other source of dollars and deposit it into your checking account on the exact same time. Okay, so there's simultaneously a reduction in your take-home pay and a new deposit going into your checking account so that you can manage your lifestyle. And there are a couple key points here because we've seen a lot of people try this and implement it unsuccessfully. And one is they're not sure exactly, well, I increased my contribution, I'm not sure how that's going to impact my take home. They're not aware of exactly the impact on their cash flow. But then second, they just say, well, I'll just start living off of this. I'll just start withdrawing dollars from this other account willy-nilly when I need it. And without the structure of an automatic withdrawal and then subsequent deposit into your checking account, it's possible that you raid this other cookie jar and you end up withdrawing more dollars for lifestyle from these other resources than you otherwise intended. But the power of this is pretty incredible. I'm going to talk about 3 different times when this can make a lot of sense. And one time is if you have a large non-IRA account out there. And maybe that account came from you saving up into it differently. Maybe it had a different purpose altogether, but we see this all the time. I've got $50,000 in an individual account, in a non-IRA account. And I would really love to get that into my Roth 401k. It's growing right now, but its growth is taxable. I'd love for it to go into my Roth so that the growth is tax-free. How do I get this 50 grand into my Roth 401k? Maybe you're not able to contribute directly to a Roth IRA, you make too much money, something like that. Well, you can increase your contribution right out of your paycheck going into that Roth 401k and simultaneously start a withdrawal out of that large non-IRA account, that $50,000 in this example, to supplement your income. You do that, it takes you a couple of years, and voila, that large non-401k account, that non-IRA account is emptied out. All those dollars playing the shell game have been put into your Roth 401k. They're now growing tax-free. Another source that's very common is you just received an inheritance. If you received an inheritance, sometimes you're going to inherit an IRA. I've done a lot of videos on those recent changes, but other times you might just be inheriting cash or a non-IRA from those individuals, or maybe your proceeds from personal property, a home, something like that. How do you get those dollars tax sheltered? As you receive them, they're not tax sheltered, and again, they're going to earn interest, or if you invest in them, there's going to be capital gains that impact your tax return. I'd love to get those dollars into my Roth. How do I do that? Well, playing this shell game, again, increasing your contribution into your 401k, simultaneously starting an automatic withdrawal from that account that can accomplish that. And then a final common scenario is I received a large bonus last year, or there was a sale of a property last year, and now I have these proceeds. They're sitting in my bank account. For last year, I contributed from those proceeds. I maxed out my 401k. Now I'm left with this pile of dollars that is growing non-tax sheltered. I'd love to get them in tax shelters. It's the same process. Increasing your 401k contribution, simultaneously starting a withdrawal from that account. Does that 2-step sort of shell game approach to leveraging more of your tax shelters and getting tax diversification, is that appropriate for you? Are you building up dollars in your net worth, in your retirement plans that are outside of tax shelters, and too much of your money is slipping through your fingers going to Uncle Sam? Work with your certified financial planner on that. Explore your tax shelter strategy as well as 2-step or other creative strategies to get dollars that are not growing in a tax sheltered way into your tax shelters. Work with your CFP on that. If you don't have a CFP on your team, contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.